Let's talk a little bit more about how this political turmoil is dominating the markets with Victoria Scholar, Head of Investment for Interactive Investor. Great to have you on Global Business Europe again, Victoria. Let's start with France. No Prime Minister, no government, no budget. What are the market ramifications?
Well, we've seen a dramatic reaction to the resignation of France's Prime Minister less than a month into the job, less than 24 hours after forming a cabinet. We saw that the CAC 40 plunged this morning. It did pare losses into the close, but still ended the session down over 1%. And we saw that it was the banks that took the biggest hit, the likes of SocGen, BNP and Crédit Agricole, all falling by about 3 or 4%, and the euro as well, feeling the squeeze. I think that the latest developments really add that sense of uncertainty and crisis within French politics. You know, France has had 5 prime ministers in 21 months, and we know that markets hate uncertainty more than anything. So I think in terms of the ramifications, it means that there could be new snap elections. At least that's what some of the opposition parties want. But to put it into context, France is dealing with a number of issues on the economy, with high levels of debt and a deficit as well that it desperately wants to try and get under control. But whenever anyone attempts to rein in that spending, it's met with quite steep opposition. So it's a difficult time for the French and the French economy.
A difficult time, and as you mentioned, potential ripple effects across the whole of the European Union. But Victoria, I want to move on and talk about Japan now, because the ruling party has this new leader, and the market seems to love the idea that she could be Japan's first woman prime minister, but she'll have a lot of challenges to deal with, won't she?
She will. There's a lot to deal with for the incoming Prime Minister. Japan is dealing with difficult relations with the United States because of the fallout from Trump's tariffs, of course. There's also other issues like an ageing population, inflation that's above the 2% target, and a fiscal deficit as well. She is heavily conservative in terms of her economics. She's very much pro-stimulus, so that could be positive for the stock market. We've already seen that, a very positive reaction from the Nikkei today, hitting a fresh all-time high. So we're looking at the potential for extra government spending and tax cuts, and she's also likely to encourage the Bank of Japan to cut interest rates too. But of course that could have implications for inflation, particularly given that it is already above that target.
I also hear that she's a bit of a hand when it comes to drumming. Do you think that means that she's going to beat new life into Japanese politics?
I think that she's definitely going to shake things up a bit, and it shows that she is definitely a determined person, and she's been in politics for a long time. She's held lots of different roles. Perhaps her drumming points to her determination, and maybe that will have implications for her policy.
Right, let's talk about the United States, because we're in day 6 of this shutdown, and then we've also got that, you know, the mega deal, the OpenAI deal. Is all of that making it hard to really get a steer on what's going on in the US economy?
Absolutely. I mean, on the one hand, you look at Wall Street and we're seeing all-time highs for the Nasdaq and the S&P. On the other hand, you look at gold, also at all-time highs. That's seen as a safe haven asset, somewhere that investors go to amid a flight to safety when there's concerns about what's going on. We know as well that the government shutdown has meant that a lot of the economic data hasn't and won't be published. That adds to that kind of opacity. And then we've got that mega AI deal that's spearheading markets higher. So a lot to digest and a lot to try and pick through. And perhaps the markets don't necessarily reflect the economic reality at the moment.
And how long do you think this is all going to go on? I mean, as long as last time?
Well, I mean, we're already into the second week. Historically, though, government shutdowns haven't actually had a huge market impact. I think what's worrying this time, though, is that there's no sign that the Republicans and the Democrats are getting any closer to a deal. But so far, markets are shrugging it off. Perhaps as time goes by, markets will start to price in some of that uncertainty.
Victoria Scholar, thank you very much.